Close, just having a quick review of the session and the day in its entirety, and fairly lackluster day, not really a great deal going on, quite typical of, I guess, post non-farm payroll conditions. This is what we often see on the Monday, and if you think about the calendar for the week as a whole, as I've been explaining to some of the guys on the trading floor, you've got the semi-annual testimony with Janet Yellen, so it's the House on Wednesday, and then the Senate on Thursday. That's obviously always a very key speech given from the Fed chair semi-annually. And with the focus on the slight shift that we've seen with central banks to get a little bit more on the hawkish side of late, certainly a lot of people will be awaiting her commentary to see whether or not the Fed will stick to their communication, which is not only for an interest rate hike this year, but also for the commencement of the tightening of the balance sheet. And so that's really important. You've also got inflationary readings, so US inflation related data towards the end of the week, and then you've got, of course, US bank earnings kicking off the next quarterly earnings season in the US as well on Friday. You've got Citi, Wells Fargo and JP Morgan. So it's kind of a second half of the week is probably where the peak of the interest will come, so all the more reason why today has been fairly quiet overall. Going into the morning, there was kind of I'd say a moderate risk on tone. You had a little gap up in the European futures. However, going into the US Open, we kind of gradually drifted south. In the S&P, got close to pivot before we've had a pretty nice bounce. Pretty much bang on the Wednesday low point here. That we hit initially at the open around Wall Street, some of that volatility. So since there we bounced higher, not a lot behind it to be honest. And on this move higher that we've had elsewhere in the Nasdaq, as we were pointing out earlier, it's found a bit of resistance on this kind of triple top we've had on a test, and we failed to really break. Just given the really lack of news flow, that level has kind of held out so far in the session. Obviously still a few more hours to go until the Wall Street close. But that high at the end of June, beginning of July, and also in the Asia Pac session is held for the time being in the Nasdaq. Maybe helping some of the recovery in the equity space has been a recovery in crude oil. And there hasn't been a lot of fundamental news flow to base the pretty strong bounce that we've had from the close to S1 where we were trading earlier in the session. Certainly when we got back up to pivot, which was pretty swift in the movement, it looked like a couple of stops got run there. It came back down to the level before this next push back higher. A lot of people might have been looking on the short at pivot, just given the technically significant level where we were trading mid kind of last week before we rallied on the back of the APIs then that were quite bullish in the setup. But then where we're trading at the moment, it's found a little bit of resistance just shy of the high that was seen around Friday afternoon. Commentary wise, we've talked about US rigs coming back online. That kind of explained the first half of the session when Europe came in and we moved lower back below 44. But the recovery, there's been a couple of noises about meetings that are said to have happened between I think it was the Russian energy minister and his Qatari counterpart, however no real details. Bit of talk as well about potential quotas that could come in for Libya and Nigeria, and don't forget they are both countries that have severely increased production over the last 2 months, that being around 440,000 barrels of oil coming back online as fields have come active once again now some of those civil tensions have died down. And so it's negated a lot of the OPEC cut. There's a technical meeting taking place at the end of the month, 24th of July, where a lot of the OPEC nations are going to be meeting. So far, though, Nigeria has dismissed any talk about them attending and consequently them having a cap. But nonetheless, some people might attribute that story to a little bit of recovery in crude. Just looking at crude, actually, in terms of one of the trades that one of the guys in the live room did earlier this morning, and just looking here on a minute chart to encapsulate some of the morning's movement, so really the center of the chart, and you had some volatility at towards the open this morning, very early in trade, just after 7 a.m. in the morning, and actually we blipped up to pivot, and one of the guys there initiated a short position, took one contract off with the kind of pickup in volume as European participants coming into trade, and then was using that trend line lower, just following the price down, and eventually got out of the final positions down at the low point here at 43.71. So really nice trade, taking the price pretty much almost a full dollar on the move, in what otherwise was just playing, I guess, on the fundamentals. As we said, the reaction at the time to the fact that dual force, the dollar was strengthening at that point, so that inverse relationship, and then in addition to the fact that the oil rigs back on track, moving higher again, which saw a pretty decent move on the downside. So a nice trade earlier. Otherwise, the pound's been a little bit tricky. It did look pretty good for a short earlier in the session. I know a lot of people were also looking at that. That being on the break of the low that was in play from Friday afternoon. Just trying to make sense of that. So on Friday you were trading at around that 129 handle, 128.97. That was also the high print that was printed up on the spike on the 27th. And so it looked pretty good at a short there. You've had a few press articles at the weekend suggestive of general pressure still mounting on Theresa May, but we never really managed to get any real momentum on the downside. And when the dollar started to just level off when the US came in, we failed to really sustain that move lower. More recently, actually, we've had a bit of a bounce here in cable. Whether coincidental or not, we've had a couple of headlines hit where there's quite a bit being made, and quite rightly so, about a very racial comment that was made in UK Parliament from a Conservative MP in giving a description about how messy Brexit could be, and that's now led to quite stern calls for her to be thrown out of the party. If that was the case, I guess if this pattern was to continue to emerge, and more kind of PR blunders from a Conservative point of view will only diminish their very slim working majority, and so that would probably give powers more so to the collective of opposition parties, which we've seen Choka Amuna being one of those, who seems to have teamed up with various other senior members from other parties of a more pro kind of favourable European negotiation, albeit executing the Brexit process, which if anything would probably be met more positively for the British pound if that were the case. I'm sure we'll discuss this more. I'm sure that will be some of the headline stories when we read the press tomorrow morning. Okay, just having a quick look then at the calendar for tomorrow. Well, first of all, actually, let me just summarise the main piece of economic data that came out this afternoon. It was the Fed Labour Market Conditions Index. Let me just refresh it so you've got the latest print. It did show a deterioration, excuse me, from the previous 3.3 down to 1.5. This is a measurement of basically 19 different labour market indicators, and so a above zero reading would be indicative of a more positive employment situation in the US. Sub-zero would be the opposite, and so it's still in, let's say, positive territory, albeit the conditions have deteriorated slightly from where we have been, and pretty much the lowest figure that we've had since the end of last year, 2016. But didn't really have much of a market impact. Looking at the calendar for tomorrow, things look much more interesting from a schedule point of view. Pretty quiet overall in the European morning. Overnight, maybe a headline of interest will be the British Retail Consortium. They released their retail sales number for June. Obviously, retail sales performance on the UK high street is quite interesting at the moment, just given the household pressures that are being felt by rising inflationary conditions. This isn't the kind of the ONS's retail sales number, so it's much lower tiered in terms of its influence for market prices, but nonetheless might act as a good kind of pre-indicator of of retail sales environment in the month of June in the UK. Otherwise, in the US afternoon, it's pretty quiet. There's chain store numbers, but then in the afternoon you've got wholesale inventories, jolt job openings. You've also got the crude oil inventories and the API aftermarket as well. It's actually speakers which are quite interesting. And I was saying to a couple of the guys here earlier that the pound has been pretty tricky to trade of late, and that's because I think that not so much the Brexit talks, it's been more the interchanging kind of view of central bankers within the Bank of England that's been actually more tradable events. And so actually looking out for Bank of England speakers has been very important for trying to trade the pound on an intraday basis. Because we had that 5-3 split, remember that was Christine Forbes, Ian McCafferty and Michael Saunders, who all dissented against the pack and voted for a hike in the last June MPC meeting. So therefore there's quite a divergence between those looking at pressures on the consumer and a lack of kind of wage growth in the face of rising inflations and the fears that could create going forward. So there's a bit of a trade-off going on at the moment. And one of the most notable speakers of late has been the Bank of England chief economist, that's Andy Haldane. He has changed view from being normally very dovish to making some very hawkish comments in recent weeks. So he's going to be really interesting, and actually that could be quite a big event for the pound tomorrow. That'll be at 10 AM in the morning. You've also got Ben Broadbent. I would say Broadbent tends to sit in line with the governor, tends to sit quite centrist if you like, and so has been someone who's been backing of keeping policy on hold for the time being. But two quite influential Bank of England speakers, 10 o'clock in the morning and then midday on Tuesday. You've also got ECB's Kerr speaking at 1, and Fred's Brainard. She tends to be one of the most dovish leaning members, and she's speaking on balance normalisation. So I guess that's in reference to balance sheet normalisation or commencement of that process. That could be a highly important speech as well, coming ahead of the semi-annual testimony in front of the House on Wednesday from Janet Yellen. Okay guys, so that's your wrap for today. Quite a tricky one overall to balance in terms of sentiment. I think overall, really tomorrow hopefully we might get a bit more direction. And I think just kind of from what we were intonating from the briefing, a lack of the market kind of commitment in either direction today might have been a bit of a byproduct of the fact that most are waiting for bigger and better things to occur later in the week. Okay, have a good evening, and I'll see you in the briefing in the morning. Take care.